please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, Infosys will be in focus today as the earnings were largely in line with expectations. Now, the company posted a 5.8% constant currency growth in FY18 and guides for a 6 to 8% growth for this financial year. Rima is here with the highlights. Rima, good morning. Well, the numbers looked all right, but the ADR's reaction, that one was down around 7-8%. What's your best estimate in terms of how the stock will react today?
Well, you could expect some disappointment on Infosys considering the rally it's already had, a 12.5% up move since the start of this calendar year, a 4% up move last week. So given the rally, a lot of the news was perhaps in the price. So first, let me quickly run you through the Q4 FY18 numbers. Revenues were slightly lower than street expectations, so they've delivered a constant currency growth of 0.6% in the March quarter versus expectations of 1%. That said, there was a margin beat, so margins went up by 40 basis points to 24.7% versus street expectations of flat margins. So that's about the March quarter. With respect to the FY19 guidance, their constant currency revenue growth guidance has come in at 6 to 8%. Now, this is in line with expectations, and it would imply that there is an acceleration in growth in FY19 because in FY18, the company delivered a 5.8% growth. But the disappointment has actually come in on the margin front, where margin guidance has been lowered for the second straight year, and now it currently stands at 22 to 24%, and that the company says is largely on account of the investments that they need to make in digital. When you look at the operating metrics, also a bit disappointing because their core verticals like BFSI North America performance was muted. On the flip side, the order wins were at a 6-quarter high. On the capital allocation, a sweetener for the shareholders then. So they continue to maintain their dividend policy where up to 70% of the free cash flow will be returned to the shareholders. But they've also said they will pay an additional $2 billion in FY19, of which $400 million will come in June via a special dividend. On the M&A front as well, so they've made a lot of headlines. The first, Salil Parekh, the new CEO, they said that they will be purchasing a digital creative agency, Wong Doody, for $75 million. The revenues from this is not going to be included in the guidance, but they will also be selling the two acquisitions made under Vishal Sikka, Panaya and Skava in FY19. So I guess they want to erase all Sikka legacy. And Kotak says it's a steady quarter, but it's the margin cut which is driving EPS cuts by the estimate. So margin reset has driven a 1.4% earnings cut for FY19-20. They say key revenue metrics are comforting. They have an ad rating. CLSA says margin reset allows Infosys to reaccelerate by refocusing strategy and energies to capture the market share. Back to you.
All right, Rima, thanks a lot for that. We'll watch out for that stock today, but also watch out for a couple of these financials. DCB Bank, Group Finance and ICICI Securities reported the earnings over the weekend. Abhishek is here to take us through all those highlights. Abhishek, good morning.
Good morning, Mangalam. So DCB Bank has reported a good set of numbers wherein their loan growth was at 29%. Now, this is a healthy loan growth. Why I say healthy is that risk-weighted asset to advances ratio has declined while asset quality has also improved. So overall, if you see, slippages have reduced by 21.5%, leading to gross NPA coming down by 10 basis points to 1.79%. However, the worrying factor is that NII growth is at just 20% when your loan growth is at 29%. Coming on to Group Finance, strong disbursement. Disbursement grew by 20% YOY and quarter on quarter. That led to AUM growth of about 17.5% on a YOY basis. Asset quality also improved. Gross NPA just 0.45 versus 0.73 quarter on quarter. ICICI Securities, now they had a strong performance on a YOY basis. However, on a sequential basis, the performance was dismal. So broking revenues grew by 32% on a YOY basis, while total income grew by 34%. The earnings, the PAT, grew by just 1.6% on a sequential basis. Back to you.
Alok Industries has issued a statement saying that the resolution plan for Alok Industries submitted in conjunction with JM Financial did not meet the approval of the Committee of Creditors. Ritu Singh is here with all the details. Ritu, morning.
Morning, Mangan. That's right. Reliance has confirmed a news break saying that the joint resolution plan submitted by JM Financial, ARC along with Reliance Industries has not met with the approval of the Committee of Creditors of Alok Industries. And remember, this is the revised offer that the consortium had submitted after in first round also their offer was rejected by the lenders. This time around as well, they had raised the offer by a good 100 crore rupees to 5,050 crore rupees. That also could not meet the 75% requisite votes required for the resolution plan to be passed under the Insolvency and Bankruptcy Code. So, in the absence of an approved resolution plan, the company is going to be headed into liquidation. Remember, the 270-day deadline for resolution under IBC for Alok Industries ended on Saturday, that is the 14th of April, the day that the voting happened and did not meet the required approval. There's a 29,000 crore rupee debt over that. In fact, that is the claims of the creditors, and the liquidation value is only about 4,200 crore rupees to the company. So you can imagine over 25,000 crore rupees of losses that the banks will have to take. It's a big hit. So with this, almost half of the first 12 companies are either resolved or into liquidation, this is the first case. The other 5 have been approved by the COC, but this one alone will be a big hit that the lenders will have to take.
Okay, thank you, Ritu, for that. So a big hit perhaps that the lenders will have to take. But on to the CNBC TV18 exclusive then, a CBDT panel which is looking at interventions to curb tax evasion by high net worth individuals is expected to submit its first set of recommendations by the end of this month. As we have been telling you, the panel is studying issues related to taxation of migrating HNIs. Timsi Jaipuria joins us with the details.
In a bid to curb high tax evasion by HNIs, the Income Tax Department is mulling to bring in interventions in the Income Tax Act and various tax treaties to curb loopholes abused by millionaires. According to sources, the 5-member working group will suggest interventions in the IT law and is likely to submit the first set of recommendations by the end of April itself. Sources further indicate that in the interventions that will be suggested, it will include tweaking of tax laws and bring in amendments in various clauses of both multilateral and bilateral tax treaties which are currently being abused by HNIs to evade taxes. Not just this, the working group shall also make recommendations for changes in the POEM norms. Having said that, the group is also engaged in preparing a list of HNIs who converted into NRIs in last 5 years. Not just this, the tax department in addition shall also speak to authorities in UAE, Singapore, Mauritius and other such tax havens which have seen maximum number of migration of HNIs in the past. Some of the information sought by the taxman includes various reasons given by HNIs to migrate, what sort of business interests do they have with these countries, since when are they operating in these countries, what are the bank account details, transaction details and business partner details. But actually what comes out as the final outcome is something which we need to see and wait and watch for.
All right, MC, thanks a lot for that. But keep your eye out on the Asian screen because the Hang Seng that opened with a cut of about 180 points, then moved on to 250, and now it has swiftly moved to the low point of the day with a cut of about 350 points. All the other Asian indices too are slipping lower as we speak. The Shanghai index down about 0.75%. What does that mean for our markets? Well, the SGX Nifty indicated a cut of 27 points at the open, moved on to 40, 50, and now it's 62 points lower. So we'll keep an eye out on that. Initial estimates indicates a cut around that 100-day moving average for the Nifty. So watch out for that. But moving on, I quote, "We are confident of replicating our 2014 election performance in 2019 as well." That's the word coming in from a confident Nitin Gadkari. The BJP leader and the road transport minister spoke to CNBC TV18 Shireen Bhan at the Hindustan Times and Mint Asia Leadership Summit in Singapore, which is underway. Gadkari played down the threat posed by a potential third front or a federal front, which is essentially a congregation of regional parties. The minister said they have only come together because the BJP is still very strong.
What is going to be the election call now as we head towards 2019? A, is there a possibility that elections will be advanced? B, what do you make of the fact that regional parties seem to be coming together?
My concentration is all on my ministerial work. It will not be appropriate to make any
that's a Pele pass, but I won't let you off.
But I'm telling you the one thing, as a party leader, that our government is very much committed for development. And today also the presentation from Deputy Prime Minister. We need socio-economic transformation, eradication of poverty. And our target is by our appropriate economic policies. We want to change all this situation in the country. And this politics for development and progress, politics for eradication of poverty, politics of creating more employment potential, I feel that people will support us. And when we are strong, it is a natural reason that the small players, they organize unitedly. So it don't problem at a time, I remember, when at the time of election, at the media, the people, the leftist people, the socialist people, very much against Mr. Modi, against BJP, but we got elected. So I feel that I am confident that again 19, the people of India will again elect Modi ji as a Prime Minister and BJP as a government, and we will change the total scenario of the country, because people have a lot of aspirations about the country and they have confidence on Modi's leadership and the BJP's government.
But do you feel confident of being able to replicate the numbers that you delivered in 2014?
100% we are confident that we will get good results.
You replicate the numbers?
100%.
Well, let's shift focus to the world of commodities, and Manisha Gupta is standing by to get us all that is happening in that space. Manisha, good morning. Last week we saw that swift rally come into the crude, 8% rallies, that is what we saw. But is that rally abating a bit, or is it continuing the up move?
Oh, it really seems to be taking a pause right now, because you have seen some strength come in for US dollar. Also, the markets do believe that we are not going to see a continuation or extension of the kind of attacks on Syria that we saw. There's no retaliation from Russia as yet, though there have been some statements over the weekend. But we haven't started the new week with more or developed concerns, and that really seems to be letting the risk appetite back into the markets. So you have equities trading on the higher side. You have strength in US dollar. You also have seen some decline come in for the gold prices. And crude, as you mentioned, yes, we did see a 3.5-year highs on that one, but that seems to be getting into a bit of a profit taking as well. But having said that, we still are holding above $72 per barrel for the Brent prices. So the gains have been immense, and would be interesting to watch if the crude oil prices do consolidate at these current levels now. Interesting trends also coming in for the metals as a space, where you did see the aluminum prices gain up by 12% in the previous week. There is a rally now coming in for copper as well. There has been a statement actually from BMW where they say that copper demand is something that they see increasing, because every electrical vehicle consumes nearly 50 kgs of copper, and the charging stations, the cables also will demand copper. So copper really seems to be in flavor as we start a new week.
All right, copper in the flavor as we start a new week. But let's take a look at the futures and options space then. More of the same that took place on Friday's trading session. The FIIs resumed their selling in the cash market after 2 days of consecutive buying. 400 crore worth sale there. The domestic institutional investors, they were about 300 crores, 100 crores too short as far as the FII sale is concerned. But if you take a look at the index futures too, the FIIs, they sold about 250 crores worth in index futures, bought about 200 crores worth in index options, and that was a positive. Stock futures, we saw a lot of short covering, primarily on TCS, which saw a fair amount of short covering in Friday's trading session. So let's take a look at the index options then. There the data was fairly bullish. The FIIs bought about 3 calls for every 2 puts that they bought, and in the lower end, that is a more heartening number, where they sold 5 puts for every 1 call that was sold. That indicates that maybe the downside is protected, and when that happens, maybe the mid-cap index has a case of moving higher and outperforming. The put-call ratio is above that 1.6 mark, so we'll watch out for that little bit of a niggle out there. But the active strikes, 10,500 put, remember that one added about 13.5 lakh shares for a premium of 100 rupees, indicating that 10,400 for sure is a support that the bulls are looking at. 10,500 call also saw some action. 10,600 call writers felt a little jittery, and 10,700 call, that should come up for you. With the markets moving higher, the premium on the 10,700 call declined, telling you that maybe there is a bit of a headwind out there.
Okay, thank you, Mangalam, for that. But with that, it is a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants for day 1 of the week. Don't go anywhere. Bazaar Morning Call comes up next.
Our first call is a buy call on Indian Hotels for a target of 149, stop loss 132. Second buy would be on Ipca Lab for a target of 788, stop loss 711. Third call would be a buy call on Glenmark Pharma for a target of 621, stop loss 555.7. And a solitary sell call would be on Hindalco for a target of 228, stop loss 244.
I have a buy call on TVS Motors, stop loss 643 and target 689. Next one is a buy call on GSFC. Stop loss has been placed at 125, whereas target is at 134. The third one is on the short side, that is PFC Futures. with stop loss placed at 89 and target on the downside is at 83. The last one is also on the short side, and that is Godrej Consumer Products Futures, stop loss 1098 and target on the downside 1032.
My first stock call for the day will be a buy on Escorts, which I'd buy with a stop loss at 935 for a target of 965. My second pick will be a buy on Tech Mahindra, which can be bought with a stop loss at 660 for a target of 690. My third pick will be a sell on Siemens with a stop loss at 1100 for a target of 1060.